Welcome to the deep dive. Today, we're really getting into it. We're taking a fascinating plunge into the heart of Nepal's economy.
That's right.
Our mission for you, our listener, is to unpack the Nepal Rastra Bank's monetary policy for the fiscal year 28-2083.
It's not just some dry document, is it? It's basically a roadmap for the whole country's economic direction.
Exactly. We'll pull out the key insights for you.
Show you how it aims to, stabilize prices, boost sustainable growth, and keep the financial system solid.
Think of it as your shortcut to understanding the economic levers being pulled. We'll look back at the last year, see how things went.
I'm going to look forward to what's planned next.
We'll cover everything from interest rates and inflation to trade and even digital finance. So let's dig in.
Let's do it.
Okay, so before we dive into the specifics of Nepal's policy, let's set the scene a bit. What's happening globally? How is that affecting decisions here?
Well, that's a great place to start because, honestly, you can't understand the local policy without seeing the global picture.
Yeah.
It's all connected. The document itself points this out. The world economy is, let's say, slowly getting back on its feet after COVID.
Slowly but surely.
Yeah, but, and this is a big but, there are rising geopolitical tensions, stricter trade policies. It creates a lot of new uncertainty.
Makes sense.
So the IMF, the International Monetary Fund, they're projecting global growth around 3.3% for 2024. It might slow a bit in 2025, down to maybe 2.8%.
Okay.
But what's really interesting for Nepal is the regional picture. Developed economies, slower growth. But emerging economies, especially our neighbors.
India and China?
Exactly. India is projected at 6.5%, China at 5.0% for 2024. That's pretty strong growth right next door.
So opportunities there for Nepal.
Definitely. The policy needs to be smart about tapping into that regional demand.
Okay, what about inflation globally? That's been the big story everywhere.
It has, but the trend is positive. We're seeing global inflation consistently dropping over the last 3 years. It's heading back towards, pre-COVID levels.
That's a relief.
It is. The IMF thinks global inflation will be around 5.7% in 2024, then maybe 4.3% in 2025.
Still a bit high, but moving the right way.
Moving the right way. And because of this improvement, many central banks are starting to loosen up a bit. They're adopting more flexible monetary policies to help their economies grow.
Like cutting interest rates?
Precisely. You've seen the European Central Bank make cuts, India's Reserve Bank too. Even the U.S. Fed, after holding steady for a while, started cutting rates towards the end of 2024.
Right.
So this global shift towards, let's call it easing, is a really important backdrop for what Nepal's central bank is doing.
Okay, got it. So with that global context, how has Nepal's own economy been doing, and what are the big goals for this new monetary policy?
Well, Nepal's economy is showing definite signs of resilience. The bank actually uses the word rhythmic, which suggests things are getting back into a more predictable pattern.
Rhythmic, I like that. Better than chaotic, anyway.
Much better. Inflation has stayed within the target range, which is great. Foreign exchange reserves are really strong, mainly thanks to remittances.
Money sent home from Nepalists working abroad.
Exactly. That's been a huge support. Plus, tourist arrivals are up, exports are improving. So after a couple tough years with economic contraction, growth is picking up again.
Good to hear. And the banking sector itself?
Generally healthy.
Huh.
There's been plenty of liquidity, basically cash available in the system. And that's led to average interest rates on both deposits and loans coming down.
Okay.
And interestingly, deposit rates have actually stayed higher than the average inflation rate.
Oh, that is interesting. Good for savers, for once.
It really is. Now, while overall financial stability is good, they are keeping a close eye on something called non-performing loans, NPLs.
Loans that aren't being paid back on time.
That's right. Those have been increasing, along with non-banking assets, NBAs. So that's a point of focus. So this policy, the 24th one, it's built on maintaining that stability, economic and price stability, while also trying to foster sustainable development. It takes guidance from the bank's own strategic plan, the government's budget, and lots of feedback.
From businesses, the public?
Yeah, various stakeholders. The aim is to improve financial services, encourage investment, what they call capital formation, and just strengthen the whole financial system.
Right. That sets the stage really well. So let's shift gears slightly. Let's look back at the previous year, fiscal year 2801-82. How did that policy actually play out? Did they hit their targets?
They did, largely. And yeah, looking at the numbers is pretty insightful.
Okay, let's hear them. Inflation.
The goal was to keep average inflation within 5.0%. As of mid-June 2025, that's just the 2082. In the Nepali calendar, the average was 4.24%, so bang on target.
Nice.
And the point-to-point inflation for that month was even lower, just 2.72%.
Wow, okay. What about the foreign exchange reserves? You said they were strong?
Very strong. The target was to have enough reserves to cover at least 7 months of imports of goods and services.
And the actual number?
By mid-June 2025, they had enough to cover 14.7 months.
14.7. That's more than double the target.
It is. It's a very, very comfortable position. It provides a huge buffer against any external shocks and boosts confidence. For a country like Nepal that relies on imports, that's crucial stability.
Absolutely. Okay, and interest rates. How do they manage those?
They use that interest rate corridor we talked about. Remember the ceiling, the floor, and the policy rate in the middle.
Right. The standing liquidity facility was the ceiling at 6.5%. Deposit collection was the floor at 3.0%, and the policy rate was 5.0%.
Exactly. And the actual interbank lending rate, the rate banks charge each other for short-term loans, mostly stayed near the bottom of that corridor, around 3.0% by mid-June.
Which suggests?
It suggests the central bank was effectively managing the amount of money, the liquidity, in the system using its tools, like open market operations, keeping things stable.
Okay, the big picture numbers look good, but how did this translate down to, businesses or individuals? What happened with actual borrowing costs and credit?
Yeah, this is where it gets really practical, doesn't it?
Mm-hmm.
The central bank, Nepal Rashtra Bank, was very active managing liquidity. They actually absorbed a huge amount of money out of the system. They're talking, let me get the figures. Net absorption was around Rs 213 karba.
Whoa. And can you remind us, arba, crore?
Right, good point. So think of it like this. 1 crore is 10 million Nepali rupees. 1 arba is 100 crore, or 1 billion rupees. And 1 karba is 100 arba, or 100 billion rupees. So 213 karba is a lot of money being managed.
Understood. A massive amount. And the effect of soaking up that liquidity.
Well, alongside other measures, it guided short-term interest rates. We saw the average interbank rate fall from about 3.6% the previous year down to under 3% by June 2025.
Okay.
And that trend, that downward pressure, it spread to the rates banks offer customers. Commercial banks' average deposit rates fell quite a bit, from over 6% down to about 4.3%.
And loan rates, the important ones for borrowers.
Those came down significantly, too. Average loan rates for commercial banks dropped from over 10% to just under 8%.
From 10.15% to 7.99%. That's a noticeable difference.
It really is. And you saw similar drops at development banks and finance companies. So borrowing definitely became cheaper over the year.
That sounds like a positive environment for businesses needing loans. Did lending pick up? Were there specific sectors they focused on?
Yes, the policy definitely emphasized sectoral lending. As of BISOC 2082, that's about April-May 2025, commercial banks had put quite a chunk of their loans into agriculture.
So much.
About 13.9%. Also, energy got 9.0%, and in SMEs, small, cottage, and medium enterprises received about 10.8% of total loans.
So focusing on productive areas.
That was the goal. And lending to what's called the deprived sector was also significant, around 5.6% of total loans. Plus, the government chipped in with substantial subsidized loans for nearly 100,000 borrowers.
Okay. Were there other regulatory changes during that year that are worth noting? Things that affected banks or borrowers?
Yeah, quite a few tweaks. For instance, the amount banks have to set aside for potential bad loans, that's loan loss provisioning, was slightly reduced from 1.2% to 1.0%.
Freeing up a bit more capital for lending.
Potentially, yes. Also, something called the countercyclical capital buffer was set to 0. Normally, banks might have to hold extra capital during good times, but this was relaxed.
Okay.
They also made it easier to restructure loans for the construction sector, which might have been facing challenges. And the risk weight for margin loans lending against shares was lowered.
Making it less capital intensive for banks to offer those loans.
Exactly. One interesting change was around NPLs, the non-performing loans. If a loan became regular again, it used to be reclassified as good pretty quickly. Now it needs 6 months of close micro-supervision first.
A more cautious approach there.
A bit more caution, yes. On the greener side, they issued the Nepal Green Finance Taxonomy.
A framework for green lending.
Right, to encourage environmentally friendly projects. And for international trade, they increased limits on foreign exchange transactions, like for Forex cards and certain types of import payments, making things a bit smoother.
What about technology and innovation?
Good question. They set up a digital finance innovation hub, working with the private sector. And importantly, the national payment switch infrastructure became fully operational.
Paving the way for easier electronic payments nationwide.
That's the idea. Finally, there were new rules on things like freezing bank accounts, social responsibility for banks and financial institutions, BFIs, and risk management for microfinance, pushing them towards standardized accounting, the Nepal Financial Reporting Standards, NFRS.
Wow, okay, so a lot happened in that previous year, setting the stage. Now let's look forward. Fiscal year 82, 83. What's the plan? How are they building on this?
Right, so building on that backdrop declining inflation, those really strong foreign reserves, the new policy for 82, 83 takes what they're calling a cautiously flexible stance,
Cautiously flexible, meaning,
meaning they want to stimulate the economy a bit more, but without taking undue risks. They see room to be a bit more accommodative.
okay,
The main goals are pretty clear. Reduce the cost of capital for businesses, basically make borrowing cheaper to encourage investment. Also, lower the cost for the government when it borrows domestically.
and maintain stability.
Absolutely. Maintaining financial stability is still key. Alongside that, improving access to credit, ensuring credit quality is good, and trying to diversify lending so it's not too concentrated in just a few areas.
Makes sense. So what are the specific targets for this coming year? Inflation, growth.
They're aiming to keep inflation around 5.0% again.
Yeah.
Maintain those foreign exchange reserves for at least 7 months of imports, though they're way above that now.
Right.
And crucially, they want the monetary policy to support the government's target of 6.0% economic growth for the year.
6% growth. Ambitious.
It's a solid target. To support that, they're projecting broad money supply, M2, to grow by 13.0% and credit going to the private sector to grow by 12.0%.
Okay, 12% credit growth. That implies a decent pickup in lending.
That's the target, yes. It signals an intention to facilitate more economic activity.
So this sounds like, as you said, a strategic easing. How are they actually changing the main monetary tools, the interest rates, to make this happen?
They're making direct cuts to the rates in that interest rate corridor.
Okay, the specifics.
The bank rate, the ceiling, is coming down from 6.5% to 6.0%.
0.5% cut there.
Yes. The deposit collection rate, the floor, is being reduced from 3.0% to 2.75%.
A smaller cut at the bottom.
A smaller cut, yes. And the main one, the key policy rate, is being cut from 5.0% down to 4.5%.
Another 0.5% cut. So that's a clear signal of easing, right?
A very clear signal. The other tools, the standing liquidity facility for emergency borrowing, the cash reserve ratio, CRR, the statutory liquidity ratio, SLR, those systems remain in place.
CRR and SLR being the reserves banks have to hold.
Exactly. They'll keep using those. And they also mentioned issuing Nepal Rastra bank bonds if needed to manage liquidity more structurally. Plus, they want better real-time monitoring of interbank transactions for more transparency.
Okay, rate cuts are the headline. But you mentioned balancing stimulation with stability. What other reforms or regulatory changes are coming in this new policy to manage risks?
That's the critical question, isn't it? How do you stimulate without creating new problems? A huge focus is on those non-performing loans, the NPLs, and the non-banking assets that have been creeping up. The number one priority mentioned is establishing an asset management company, an AMC.
What would that do?
An AMC would essentially buy up bad loans and distressed assets from banks. This helps clean up the bank's balance sheets, freeing them up to lend more confidently, and the AMC then tries to recover value from those assets.
Ah, I see. Like a bad bank concept almost.
Sort of, yes. It's a common tool used internationally to deal with stressed assets. They also noted that even with plenty of liquidity, private sector credit growth wasn't as strong as they hoped last year. Right. So there's a strong push for banks to really prioritize lending to productive sectors. But based on proper analysis, looking carefully at the project's viability and the borrower's ability to repay, not just lending for the sake of it.
Quality over quantity, perhaps?
Something like that. They're also implementing the second phase of a broader financial sector strategy.
Okay, what does that involve specifically? Any changes that people might notice?
Yes, quite a few targeted changes. For housing, the limit for private residential home loans is going up from 2 crore to 3 crore rupees.
So up to 30 million rupees now?
Correct, with loan-to-value ratios set 80% if it's your first home, 70% otherwise.
Okay. Anything for businesses? Agriculture, SMEs?
Yes. For smaller agricultural projects up to 10 lakh rupees, banks can now do their own evaluations, simplifying the process. There are also new, slightly relaxed rules for loan loss provisions on certain agricultural loans during their grace period.
Trying to encourage lending there.
Seems so. And hotels or restaurants near highways that meet food safety standards can get loans up to 3 crore counted as SME loans with a favorable interest rate cap.
Interesting niche focus. What about the stock market investors? Any changes to margin lending?
Yes, the limit for margin loans backed by shares for a single client has been increased significantly, from 15 crore up to 25 crore rupees.
Wow, from 150 million to 250 million rupees. That's quite a jump.
It is. It could potentially increase liquidity in the stock market.
Okay. What about regulating the banks themselves? Any new frameworks?
Yes, they're bringing in a framework for domestic systemically important banks, DSABs.
The too big to fail banks.
Essentially, yes.
Yeah.
The largest banks that are critical to the whole system. They'll face some additional regulation and closer supervision because of their importance.
Makes sense. Any new types of banks?
They're moving forward with the legal setup for something called a neobank.
Yeah, bank, like neobank, digital first.
Sounds like it. The goal is to further expand financial access, likely leveraging technology.
Interesting. What about microfinance?
They're reviewing the policy on how much dividend microfinance institutions can distribute. Currently, there's a cap. And certain loans for Nepal going abroad for work, up to 3 or 5 lakh rupees, depending on circumstances, can now be counted as deprived sector loans.
Supporting migrant workers.
Exactly.
Eh.
And for Nepalese traveling abroad themselves, the foreign currency allowance for travel to countries other than India is being increased from 2,500 US dollars to 3,000.
A little bit more spending money for travelers?
A little bit, yes.
What about payments and fintech? You mentioned the switch infrastructure is ready.
Right. They're reviewing guidelines for digital lending, launching a regulatory sandbox.
A place to test new fintech ideas safely.
Exactly. And they'll identify which payment systems are systemically important.
Yeah.
SIPS, meaning they need extra oversight because if they failed, it could cause widespread disruption.
Okay. And security. Money laundering.
A continued strong focus there. They're coordinating efforts to get Nepal off the FATF gray list.
That's the International Anti-Money Laundering Watchdogs list.
Correct. They're implementing recommendations from the regional body, the APG. The Financial Intelligence Unit, FIU, is being automated to improve investigations into things like money laundering and money mule activity.
People tricked into transferring illicit funds.
Precisely. And finally, financial inclusion remains a priority. They want to make it easier to open accounts using the national ID card, develop ways for banks to share Know Your Customer, KYC, info digitally, and run outreach programs in rural areas. They also plan to tackle dormant accounts.
Okay, wow, that covers a huge amount of ground.
It really does. It's a comprehensive policy.
This whole deep dive, it's really highlighted this intricate balancing act the central bank is performing, hasn't it? Trying to stimulate growth.
But without letting go of stability.
Exactly. From the big global trends right down to the rules for specific types of loans here in Nepal. It's quite something.
Absolutely. And for me, what's really interesting is seeing how they're adapting. Facing the NPL issue head on with the AMC plan, embracing digital finance.
While still keeping those essential safeguards in place.
Right. It's all about making sure the financial system is actually helping the real economy, helping businesses grow, helping people achieve their goals, but doing it sustainably.
So a final thought for you, our listener, as we wrap up this deep dive. What stands out to you? How might these changes, the lower interest rates, the focus on specific sectors, the digital push, how might they impact your own financial life?
Or maybe it sparks some curiosity. Perhaps you want to look more closely at one of those sectors getting prioritized, like agriculture or energy or SMEs.
Yeah. Consider this ongoing story, this dance between managing inflation, guiding interest rates, and pushing for national development. It's complex, it's dynamic, and it affects everyone.